it says to me that the underlying level of demand for housing in New Zealand is probably a lot more than you would think if you're simply looking at the data showing house prices falling on average 15% since the peak in November of 2021, 1.7% in the month of December, etc. Well, hello again, everybody. Over the past week, we've learnt something interesting and new out of the United States, which perhaps is relevant to something going on in New Zealand as well. And this relates to their labour market. Every month we see the release of numbers showing how much jobs have increased or decreased in seasonally adjusted terms over the previous month. And there had been an expectation that in January, maybe 185,000 extra jobs appeared in the American economy. The actual outcome was 517,000, much, much greater than anybody had been expecting. And of course, a bit of a surprise, maybe a little bit of a grain of salt being taken with some of the outcome there. But overall, what it's showing is that maybe the US economy doesn't have a recession this year, but it also shows that maybe consumer spending, demand for housing across there is going to be stronger than people were anticipating, and also some evidence that with all these announcements of redundancies of people from the tech sector in the United States, maybe they're getting other jobs extremely quickly because of the still low unemployment rate over there, now 3.4%, and the difficulties firms are having getting staff. Now, fairly much the same situation, I'd suggest, is in place here in New Zealand. We've got the low unemployment rate still in place there, around about 3.3% or so. We've got businesses, although they're saying they plan cutting back on staff numbers, they are also still very strongly saying it is difficult to get the people that they want. And what that says to me as an economist is that businesses probably are going to lay off some people, most definitely. There is some overdue rationalisation to occur, but we can all still see the shortages of staff out there in so many sectors, especially hospitality, accommodation, etc. And it says to me that the feeling of job security which people have through 2023 is still going to be relatively strong. Now, that counts for something when we're looking at people rolling from 3.5% mortgage rates into 6.5% or something like that. They're still going to have a job. They can pick up extra hours of work if they want. Wages have also grown slightly faster than the cost of living over the past 3 years. It says to me that the underlying level of demand for housing in New Zealand is probably a lot more than you would think if you're simply looking at the data showing house prices falling on average 15% since the peak in November of 2021, 1.7% in the month of December, etc. Chances are house prices are still going to fall a bit further. But I think there is still fundamentally strong underlying demand from the labour market factor out there. Also, it pays to note that the net migration numbers for New Zealand are improving extremely rapidly. There's a net migration gain over the past year of almost 6,000 people. And there is capacity that in 12 months' time, the net gain could be back around 40,000 again, or about 0.8% boost to the population. So keep that in mind in terms of underlying growth and demand scenario. Obviously, unfortunately, in Auckland, Northland, etc., there are some houses taken out of commission, a lot of them going to have to be repaired over an extended period of time. That's going to place some upward pressure on rents as well. It'll be interesting to see if there's repricing of at risk of inundation locations versus others. Offshore, the research shows when you get an event like this, there is a discounting of the prices of places in those locations, but within 2 or 3 years, it's pretty much gone. It's like people sort of forget about these sort of things there. But overall, the main message I wanted to get across this week is don't be thinking necessarily the unemployment rate is going to shoot up strongly in New Zealand and cause some new extra weakness in the labour market. I think the risk is we get some positive surprises on jobs growth, the level of employment in New Zealand, and as the year goes by, that's just going to slowly, I think, drag back people's feelings that, maybe house prices fall anew because the unemployment rate goes up. No, actually, the last time the unemployment rate went up from the global financial crisis, the rate was still rising, going up, more people unemployed, while house prices were already going back up again. So on that note, thanks very much for listening again. Cheers.